Look, I think in terms of our opinion on the economic recovery plan, it's really focused on the rail sectors. We are enormously supportive. In fact, I don't think we could be more supportive of what government is planning to do. We think that with this unbelievable rail heritage that we have in South Africa, the first train ran in South Africa in 1860, 160 years ago. We've got 36,000 kilometers of installed track, 80% of Africa's installed base. And if we had to replace that today, that's sort of circa 1.5 trillion rand infrastructure. And the bottom line is that even the most efficient railway in the world, if it was the only company responsible for operating that enormous infrastructure, would not be able to satisfy the capacity that infrastructure has available to it. So when you've got excess capacity in track infrastructure, we've been saying for a number of years, we've been gearing ourselves up to be able to operate alongside Transnet on that infrastructure, and we're excited about that opportunity. What's really rare about this open access policy that government wants to bring out and giving third-party operators access to the core network in South Africa is that for government it's a very rare win-win. You have infrastructure that's lying idle at the moment, as I've said, and you have operators that are willing to take up those slots that are available. When you have that scenario, you have those operators paying for that access. So you generate a huge new income stream for that railway infrastructure owner. So it really is a win-win. And when you look at South Africa and you have somewhere between 15 and 17% of our general freight that moves on the railways, and you look at the 195 million tons plus minus, that's the intercity market, it's an enormous freight market that's available to move to the railways and generate these huge access fees for the railways, take costs away from the roads, reduce the cost of logistics in South Africa, improve the efficiency of our economy, stimulate general economic growth. It's really the most exciting policy shift without government having to put 1 cent of its own money into developing all of these benefits. So on the proviso that the access regime that is being promoted by government is equitable, in other words, slots are allocated to private operators on an equitable basis with Transnet, and on the proviso that the access fees that are going to be charged make sense, which we have to assume they will be, because what's the point in rolling out a policy shift like this if they don't? So we have to assume there will be. But on those provisos, we do have shareholder support to roll out a 1.5 billion rand locomotive and wagon procurement program immediately on conclusion of the access arrangements with Transnet. That would be the start of a multi-year program where at the end of 5 years we would plan to have invested between 14 and 17 billion rand in locomotives and wagons to expand the capacity of South Africa's rail movement. From a Traxtion point of view, we believe we're ready for this because we've spent the last 33 years running trains in South Africa and in Africa. We are the only ISO 9001:2015 certified operator that we know of on the continent. We have 80,000 control documents. We have a rail school that is QCTO and TITA accredited. We've invested in a major new workshop complex in Pretoria as our maintenance base. And really, we've been preparing for this in many ways for 33 years. This is the moment, in 160 years, this is the moment when private operators, for the first time really, will be allowed to enter the South African market. It's exciting, the investments that will come into the South African industry. Okay, there's no doubt. It's brilliant, the number of people that will be employed in the manufacture of rolling stock in South Africa. It's brilliant, the number of people that we will employ and train directly to run these services. But we have to remember that that's not the big story. The big story is what's happening upstream. The big story is the new farms, the new mines, the new businesses that will be enabled as a consequence of having greater access to a rail infrastructure that makes those businesses internationally competitive for the first time, unlocks this huge investment upstream. When we invest in a number of train sets to service a mine as an example, we'll employ 40 people, maybe 50 people to run that train service. That mine could employ 5,000 people. That's the real story for South Africa. And that's why this is such an exciting policy shift. So our plan is to 100% target general freight. We believe the bulk freight markets are extremely well serviced by Transnet in South Africa, and we don't see an opportunity to enter into that bulk freight market. The target for us will really be that general freight market, that market that is circa 15 to 17% serviced by rail. And really, it's a 100% road to rail conversion. And that's why, coming back to the win-win, it's freight that Transnet doesn't service at the moment that we will bring to the railways in South Africa. The other thing that I think it's very important to explain as part of our strategy is that we want to partner with the big freight movers in South Africa. We have got absolutely no interest in investing in inland container depots, into warehousing facilities, into freight consolidation hubs. All we want to do is run trains. We want to partner with those big South African and highly successful and advanced South African freight movers to provide them with this rail solution to grow incrementally over and above what Transnet services at the moment. So our strategy is to partner with one of the big blue chip OEM locomotive manufacturers and with the South African domestic wagon manufacturers. What we would do with the locomotive manufacturer is enter into a multi-year procurement program with them. The benefits, of course, to us of a multi-year procurement program is that it enables our business to grow and scale for us to work with the companies that we partner with to provide these rail freight solutions, to grow that freight solution over a number of years. But the benefit to the South African industry of a multi-year procurement program is that it provides confidence to the South African market so that your subcomponent part suppliers can invest into production locally. I've got absolutely no doubt that when you have got a number of companies procuring locomotives for the domestic market and you're doing phased procurement programs over an extended period of time, that creates the confidence. And that confidence will translate to investment into the domestic rail market. So the localization that at the moment is being regulated by the DTI, I can't see that regulation being required at all, because it just makes sense to manufacture locally if you've got multiple counterparties that are providing orders for parts in the domestic market. So I think for the major OEMs that we partner with, that would be good for them. But for the industry as a whole, I really do see this as a transformational moment. And these past 5 years, where we've seen these massive retrenchments and liquidations and companies going into business rescue in the South African market, I do think that this would precipitate something of a new dawn for the industry.